Good morning. Welcome to Morning Call. I'm Latha Venkatesh. With me are Sonia, Shenoy and Anuj Singhal. I'm kind of daring the market with the color of my sari, ain't I? The global markets are clearly suffering from the fact that there are growth blues. And the Indian markets will have to react to a bunch of numbers, most of which were bad. Okay, the big boy Reliance was in line with street expectations, maybe a tad better. But most of the numbers indicated that the slowdown is on. And then there is, of course, the fear that the government is going to start up a cleanup of black money issues, which might lead to jitters on the P-note front and therefore impact markets.
Oh yes, Latha, hi, good morning. Anuj, hi, morning. We were at an investor camp over the weekend, and the feedback that we got from the camp is that this market is still going up. And so 9 out of 10 people in that camp continue to be very bullish on the markets with a long-term view. But in the shorter term, there was some caution for sure. And I see where that's coming from, because as we head into trade, Latha, not only are the global cues weak, not only is there not much of an improvement in earnings this season, but also, as you rightly pointed out, the most important cue, I guess, will be this, SEBI being asked to put in place a mechanism to monitor the P-note owners.
Yes, actually this keeps surfacing in the Indian tax scene every now and then. But the SIT put all those doubts on the paper. This is the special investigation team on how to end black money. It's a pet project, or so it seems, of Mr. Arun Jaitley himself. And the paragraph on P-notes is only one of the many paragraphs. I mean, they speak about, how expenses are bloated and incomes are brought down, how foreign money, even in trade transactions, is used by, transfer pricing largely, to launder money. So there are various loopholes that they want to plug. Many of the, the Varinder kind of companies, the did you know kind of companies, where you just boost up the share capital, do circular trading, and then book long-term capital losses or gains, as the case may be, depending on which side you are. So it speaks about a lot of money laundering. Unfortunately for me, it doesn't speak about land. I mean, that is the biggest generator of black money. The SIT is silent on that. It is silent on election funding. Those are two huge sources of black money generation. But this paragraph, or a set of paragraphs, 3.1, 2, 3, 4 paragraphs on P-notes, what it actually says is, it begins with doubting the quality of P-notes. It says that there is 2.75 lakh crore or $45 billion of outstanding P-notes. 31% of them come from Cayman Islands. Now, the total population of Cayman Islands is 50,000 people or 56,000 people. To believe that 86,000 crores are invested because of those people's interest in India and Indian shares is a tall story. And therefore, it tells SEBI to go and find out who are the final owners. In many cases, the P-notes are sold to institutions which are appropriately taken care of, or rather, investigated under some authority or regulator or the other in their respective countries. But their final owners, I mean, they are sold to companies which are held by companies which are finally owned by promoters whose KYC is not done. Yeah. So what SIT tells SEBI is, find out that final owner. If the final owner is in a company, find out their promoters. But we should know the human beings behind the P-notes.
So will that spook the markets today?
That is my fear. I mean, if it is perceived, as the pink papers are crying out, as a process of cleaning out P-notes, then the markets are definitely going to be spooked. And this is not the first time it's done. In 2007, the Damodaran SEBI had clearly set out a 2-year time frame to clean out P-notes, telling the foreign investors that we will make it very easy for you to register in India, but don't hold Indian shares through P-notes. Hold it through legitimate registered FPIs, as they are called today. If this is seen as a process similar to what was undertaken in 2007, the 2007 process had to be stopped because of the Lehman crisis and the flight of dollars out of India. Now we are once again in a fair dollar position, fair reserves position. So the government may well go ahead with this. At the moment, it's recommendation. It's not as if it's a done deal. But the markets will start thinking many months ahead.
Okay, so that is one of the big concerns that the market has. If you look at the flows situation as well, the FII flows have slowed down considerably. In fact, on Friday, we saw FIIs buy just about 6 crores in the cash market. But there was selling in stock futures and in index options. So that's something to keep on your radar. Anuj, hi, morning. You know, the market closed on a weak note last week, so down about close to 1%. And there are many negative cues that the market will have to deal with at the start of this week.
Yes, Sonia, morning. Too many negative cues to start the week for the bulls. And I think this SIT recommendation on P notes as of now is a sentiment negative. The SGX Nifty is indicating a 50-point downtick. So, you know, 50 point is really par for course for our market. So let's see how things shape out. You know, this of course is not the final word. So I think the market, based on this, I would want to see the evidence of more selling intraday to say, okay, this is a big negative for the market. As of now, SGX is indicating 50-point downtick, but then things could change as we move forward. The second negative is, of course, the global cues. They are also negative. But in that, you know, over the last few days, the market has had the habit of looking at Brent crude's fall more positively than anything else. So that could be something to look forward to. So that's something I'll be watching out for. But I think the most important and negative cue for the market is purely the momentum factor. When you start expiry week is about momentum. The last 2 days have been negative. I'm not saying the car is in reverse gear right now. It was in top gear last week. It's come down to say second gear or something like that. So as of now, the momentum may be shifting down. It has not entirely shifted down. The evidence of that would come maybe in today's trade, because today you're going to have a big gap down. If that doesn't get bought into, and if the market closes at low point of the day, make no mistake, that case would mean that bears clearly have a bit of momentum back with them. So that's something to watch out for. Now, again, if you take a look at this market, the problem for this market is that this is so F&O driven right now, so speculative trading driven. I mean, look at the cash market number. FI net sold 7 crore, DIS actually net bought 200 crore, and still the market was down 70 points and closed at the low point of the day. What is that telling you? There was not even index future selling. There was only index option selling. And index option selling, when you have call option selling 800 crore, it tells you one thing, that the market is not going up. It's not telling you that the market is going to collapse. Because if for example, where was the selling? The selling was at 8600, 8650 and 8500 call options. The call sellers would make money if the market does not go up, does not go beyond 8600. But that's not telling you much. It could still go to 8600 and you could still make a lot of money by selling some of these index call options. It's telling me one thing, that the roof for this market is now 8600 to 8650. And that is why, you know, Latha, we had maintained that the risk reward for this market is not in favor of the bulls, and wait till 8650 is taken out. And only then can you be sure that, okay, the final momentum is on the way up. As of now, 8600 to 8650 is the clear roof for the market. The bigger question is, what is the support for the market? Where does the Nifty see support? In that, 8400 to 8450 becomes important support, because on the way up, this was a massive resistance zone for the market. And it also coincides with the 200-day moving average. So the sense I get today is that if you have a downtick opening, there would be one attempt to defend 8500 or 8450. One attempt for sure would be there to defend 8450. If that is not successful, and if the market closes below this 8400 to 8450 zone, then there's trouble for the market. Otherwise, you know, the market may well negotiate this patch and, you know, move around this 8400, 8450, 8500 thereabouts. A lot of weak hands.
Where are your bets?
My bet is that the market will not take out 8600 or 8650.
No, I mean 8450. That you have proven.
Yes, 8450. Let's say
how much can P notes spook about?
It's 50-50 right now. It's 50-50. I think it could go either way. This morning, if the market closes at low point today, after opening with the kind of downtick, in that case, it would become 80-20 in favor of the market breaking 8450. If the market today recovers and actually closes above 8500, bulls would have hope of defending 8450.
You're not a long way away from 8450 actually.
Yes, we're not. Just about 70 points. 70 points, yes.
And I was a little puzzled by the way the rupee moved on Friday. There was no reason for the rupee to become so weak. I mean, I've always argued that going by the kind of inflation we see and others see, the rupee should be weaker, and its strength is a problem for the Indian economy. But there was no reason for it to go to 64.03. The FIs were not big sellers, and crude and gold was so heavily in favor of India and its current account surplus, if anything, that I was a little surprised that the direction itself was negative, and it crossed, 64. So maybe there were already worries about, were there leaks? Was the market smelling something about the P-note issue? We have to keep that angle also in mind.
Oh yes, and one more important thing, one of the pink papers did a report on the earnings this season, and they said that the growth in the profits of 200 companies that have reported earnings stands at just 5% growth in profits versus about 12% that we saw in the March quarter. So that just shows that the companies are just not growing. And on Friday, we saw so many disappointments from the mid-cap space, whether it was Crompton Greaves, whether it was TVS Motor, M&M Finance, Havells, IOB, the list is long. And now as we head into this week, we have important earnings from the likes of ICICI Bank, L&T, ITC. So the market is going to be a bit cautious ahead of that.
Even the earnings improvement, Sonia, a lot of this is on account of commodity prices falling and margins improving. So top line growth is something that is even more anemic than the bottom line growth.
All right, well,